Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside. Like Riot Blockchain before it shot up 10,090%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,050%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugepreview.com for a free look. Again, that's powergaugepreview.com. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is November 10th, 2022. Beautiful Thursday after the hurricane down here in Florida. We got a huge show coming up. We had a CPI number come in today, and it wasn't hot. The market's rocking and rolling. We're talking about what's going on in cryptos. Is it the end of crypto forever? This and so much more coming up right now on Making Money. Once again, welcome to Making Money. I'm Matt McCall. Thanks for joining me. It is the 10th of November, 2022. It is a beautiful Thursday. I think it was going to be beautiful because we've had these hurricane warnings here in South Florida. It was supposed to hit almost directly where I'm at. I fell asleep to rain, woke up to sunshine. So hopefully everybody else was able to get out of this unscathed as well. And no power down and all that kind of good stuff, any damages. So hopefully everybody else is staying safe with Hurricane Nicole that came through. But as I mentioned, we have a big show coming up. There's so much going on in the market right now. Obviously, the very big news, let's jump right into it this morning, was the Consumer Price Index, the CPI. The CPI came out for last month. It came out better than expected. Markets were looking for a headline number of 8%. It came in at 7.7. That's down from 8.2 last month. So that's a pretty nice drop down. If we take a look at the month over month for the CPI, the estimate was for a gain of 0.6%. It came in at a 0.4% increase, same as last month. Then we take core. When you remove energy and food, core was expected to come in at 6.5, came in at 6.3. Again, lower than a 6.6 that we had last month. And then the month over month for the core was expected to be 0.5%. It came in at 0.3 versus 0.6 last month. So we really came in much lighter than expected. The numbers may not sound like that, but it is. And that's why you're seeing the market rock and roll and seeing right now the Dow about a little over an hour into trading up about 900 points right now. So the Dow's up big. NASDAQ's up nearly 4%. S&P's up over 3%. So you're seeing a big bounce. We'll talk more about stocks in a minute, but I want to talk a little bit more about CPI here. So the estimate going in to today's announcement from the Fed was that we had about a 50% chance or so for the next meeting in December, the FOMC meeting, about a 50% chance of a 75 basis point rate hike, which they've done 4 consecutive months. And there was a 50% chance of a 50 basis point hike. So that changed dramatically. And I'm going to show you here in a second how that changed and where we stand right now. As you can see here on the screen, this is as of right now. Right now, there's now nearly an 81% chance of a 50 basis point hike come December. You can see here the meeting's on December 14th, and only a 19% chance that we'll have a 75 basis point hike. So that's a big change. And that's a big reason the market is rallying like it is, because if the Fed takes its foot off the accelerator and goes from 75 down to 50, maybe then first meeting next year is only 25. Maybe at some point they pause in the first quarter. Maybe they even pivot and go the other way and start lowering rates sometime late next year. But the first thing they have to do is take the foot off the accelerator, go from 75 to 50, which as of right now, unless something dramatically changes between now and December, we'll likely see only a 50 basis point rate hike. Again, this is the first sign, folks, of the Fed slowing down, which is why we're seeing stocks right now rally. And I said about a month or two ago, I believe CPI had topped out. It peaked. And if we break down these numbers, you're gonna start seeing, wow, this is just the beginning of a huge decline in CPI. I think we see in the next 4 to 5 months. Let's break it down. Some things that were lower this month. Used vehicles down 2.4%, apparel down 0.7%, medical care services down 0.6%. I always said the canary in the coal mine. I've been saying this for over a month now. For CPI, then means the Fed, and then that means the stock market direction will be shelter. It's about 1/3 of the CPI is shelter. Shelter was still up 0.8% for the month, the largest increase since 1990. Year over year, up 6.9%, highest annual level since 1982. So with 1/3 of the CPI still hanging around up there. However, if you look at rents over the last couple of months, they're in a free fall. Look at home prices. They're starting to really roll over as well. That's shelter. It's lagging. It hasn't made its way into the CPI yet. That means in the next couple of months, when these numbers that we know they've happened, rents are rolling over, home prices are coming down, that's going to knock down shelter to go along with other prices that are falling back already. Energy. Add that all together, folks. You see CPI, first quarter next year, we likely see CPI below 6%. Then what? Then the Fed definitely slows down because they've done their job, because it's going to continue to go lower. This is just the beginning. I'm not saying there's a bottom in the market here. I'm not saying you run out and do that. But however, for the market to have a sustainable rally, we need inflation to roll over, which is beginning to do right now. We need the Fed to slow down, which it will start in December based off these numbers. That's why I'm wearing this shirt. If you can't see, it says I'm bullish. I'm always bullish, but it says I'm bullish. And this is from Chaikin Analytics. My good friend Mark Chaikin gave me this. He also gave me a red one and said I'm bearish, but that's not coming out right now. But that's why I'm bullish. So some more prices here. If we take a look, food index rose 0.6% for the month, up 10.9% annually. Energy is up 1.8% for the month, 17.6% annually. These are still big numbers, and they're starting to roll over. These numbers are going to slow down, and it's going to go into the CPI. The other big news this week, well, a lot more big news to talk about. The other big news was on Tuesday, the midterm elections. And most people were expecting a red wave of GOP taking over potentially both houses. And we did not see that. It's likely they're going to take over the House, and the Dems may keep the Senate. Either way, we'll end up most likely with a split government. Obviously, we have a lot of races that are still very close. So we end up with a red ripple, not a red wave. And politically, I don't want to get into it, but the market was expecting this red wave. We didn't get that, and that's one reason the market was down yesterday. Another reason was because of what's going on with cryptocurrencies, a bit risk off. I'll talk about that in a second, and maybe a little bit of hesitation going into the CPI number this morning. But right now, it looks like we're going to have a split government, which is typically good because it really puts the government at a standstill. And we did have some sectors down. Energy stocks were down yesterday because more GOP in there. They thought there'd be more money going to old school fossil fuels and better for energy. So we're not seeing that as much. One bit of good news is cannabis was legalized in 2 of the 5 states. It was on a ballot in 5 states. It got legalized in Maryland and Missouri, South Dakota, North Dakota, and Arkansas. They said no. But that to me is a good sign. If you're allowed to go out and have a beer, you should be able to have have cannabis if you want, in my opinion. So if you take a look here, I'll pull up the chart of MSOS, which is this is a chart of the U.S. cannabis stocks. It's an ETF by Advisor Shares, and you can see down here. I mean, it's gotten crushed. It was up around $50 a share about a year and a half ago. Now we're down at 11, but it's trading at the best level that we've seen in over a month. So maybe we're starting to turn around and getting ready for people to finally start believing in cannabis and cannabis stocks and the upside for that. So again, politics and markets, you have to keep an eye on the political aspect because it does affect markets. However, please never let your political ideology get into your investment decisions. I remember when I managed money for 17 years until last year. When Obama got elected, I had clients call and tell me, get me out of the market completely. Obviously, for 8 years, the market did pretty damn good. When Trump got elected, same thing happened. People called me, get me the hell out of the market. Obviously, the market did good. So you can't mix those two because it's like mixing oil and water. It doesn't go well, not one bit. So please, I try not to talk politics here. I have to mention it from time to time because it does tie into market. But please keep in mind that we want to distance that and let me do the connections for you, and don't put that in front of the decisions you're going to make. All right, before we jump into the market a little bit more, I'm going to look at some charts here and kind of show you where we stand with the rally that's going on. We need to talk about what's going on in cryptocurrencies. And it's been you can't make this shit up. Like, it's crazy. FTX and Binance, what's going on, there was a kind of a spat between the two founders of the largest and second largest crypto exchange in the world. Spat was going back and forth between the two of them. And then all of a sudden, about 24 hours later, this was going on Twitter, Binance came out and said, okay, we're going to buy FTX. Within 24 hours from that notification, they said, well, we did some due diligence and we looked at the numbers, and we think there's an issue there with liquidity. We're backing out. So the token that follows FTX is basically falling to zero, likely. It looks like FTX is going to go bankrupt as they're really hitting a liquidity crunch, a bank run, if you will. And that's the world's second largest crypto exchange by daily volume. Binance is number one. This led to Bitcoin and the entire crypto markets getting crushed. Bitcoin down to 15,000, hitting the low of the year. It's now back up to 17.5, so we've gotten a bit of a rebound from that. But still, man, oh man, this is having some ripple effects because, when you have a newer industry like cryptocurrencies, you have great people creating great projects on a blockchain, but you have very bad people that don't care about you or society and are just trying to make a buck. And that's what we saw happen here. We've seen it too often. And I know most of you are going to cringe when I say this, but part of me believes we need more regulation in the cryptocurrency market for two reasons. One, it will help us avoid situations like this because somebody will be making sure that these companies are solvent and not taking your money that you put in there, commingling together and lending it out somewhere else or buying something else. And basically, when things happen like this, there's no money left. Ponzi scheme. So we need somebody to keep an eye on that, number one. The second reason I think we need some regulation is that if we do get regulation and more people feel comfortable about cryptocurrencies, you'll have more people wanting to invest in it. You'll have more large institutions be willing to put money into it. Because of the lack of regulations, it keeps a lot of people out. So I'm anti-big government, but there has to be some type of regulation to avoid situations like this going forward. The one silver lining I will see in this situation is I believe that we're probably near the end of these bad actors here getting out. Large bad actors. There's a lot of small bad actors in this industry that are still hanging around. But as far as the large guys are concerned, this is kind of like you have to just get rid of it. You have to get rid of the bad people. And the ones that come out on top, folks, I think will be some winners. And I'm going to talk about a company in a minute that I think could be sitting up for that. However, I was looking at FTX. And if you don't know FTX, you probably do. You probably saw it and even know it. I mean, their logos are everywhere. So the Miami Heat, they just signed in 2021 a $135 million 19-year deal with the Miami Heat to name their arena the FTX Arena. It used to be called the American Airlines Arena. Well, I hate to tell you, that name's not staying there that long because they're not going to have the money, and then that's going to go away. So if you're looking to sponsor an arena, give Miami a call because they're going to need a sponsor here really soon. And it's reminiscent to me of 99-2000, a company by the name of CMGI, one of those internet darlings. They got the naming rights for the New England Patriots football team. And I think it lasted a year until they were insolvent and they took the name off. So this isn't the first time you'll see this happen. But also they have a 5-year deal with Major League Baseball to be their official cryptocurrency exchange. They put the FTX patches on all the umpires' uniforms. So if you watch the World Series like me, and yes, my Phillies lost, but boy, we had a hell of a run. FTX on our uniforms. They're the official cryptocurrency exchange partner for Formula One, Mercedes-AMG team. If you know last year's MVP from the American League, Shohei Ohtani, he's their global ambassador. In exchange for a stake in a company, sorry. Steph Curry, we all know, signed a partnership with FTX. And how about this poor bastard, Tom Brady, he's having a hell of a year, huh? His wife leaves him, divorces him. His team stinks. He's getting beat up. And also, he was an ambassador for FTX where he had an equity stake. Again, probably worth nothing. That guy's having a hell of a year. If you feel like you're having a bad year, Tom Brady's getting beat up. I almost feel bad for the damn guy. Also, they had naming rights for Cal Berkeley. They signed a 10-year deal in 2021 for their school's football stadium worth $17.5 million. Again, if you want to have your name on a stadium, maybe you give Cal Berkeley a call. You might be able to get it on there. So where do we go from here in crypto? I called my guy in crypto last night, who I think is the smartest guy in crypto that I know. Spoke to him for 2 hours last night because we had a hurricane here and rain didn't go anywhere. So I spoke to him and we talked about anything under the sun. We talked about cryptocurrencies, and he's been telling me for months when it was back in 40,000 that he thinks it could hit like 12 to 13,000. We came down to 15. So if it gets down to 12 or 13, I'm going to be a heavy buyer. I'll tell you that in Bitcoin specifically. Some of these other projects I think might be in trouble. I think Ether's still fine, but I think we're seeing a lot of volatility as this story with FTX and Binance plays out. The founder of FTX just put out like a 25 tweet apology. I didn't have a chance to read it yet. It just came out before I sat down. One of my research analysts just told me that. So this is going to continue to be volatile. Could we have hit that bottom at 15 because of this capitulation? Sure, it might be. But I'm not ready to go headfirst in yet. So I'd keep an eye on it if you want to get into Bitcoin. I would not sell it here. I think we're too close to a bottom, if not at a bottom already. So that's my view there on that. So I would hold off doing really anything. Kind of sit in your hands and see how this plays out right here before you do too much. So one more thing I'm going to take a look at here is let's take a look at the markets. I haven't had a live show in a while. We've had a lot of great interviews, as you've probably noticed, from our annual conference, Stansberry Research Conference, that we have in Boston. Next year's we'll be back in Vegas, and if you've never attended one, I will say that it's one of the greatest events I've been to. You have all of us speaking. We bring in great outside speakers. We have great events. You get to mingle with all of us, all the analysts, all the names you see on all the emails. We're all there mingling, having a good time. I tell you, it really is. And another thing is the people that come, the hundreds of people that come, all are in the stocks, into the market. And the information gets shared. You meet great friends and people there too. I've met so many friends being there. So as it gets closer, of course, we're 12 months away, but I'm going to remind you because I think it's something that you should really consider. All right, so let's take a look here at the markets. Here's the S&P right now. It's at the high today at 4.3%. If we close here, I'm going to zoom in a little bit. If we close here, it'd be the best close for the S&P going all the way back to September 14th. So you're basically looking at almost a 2-month high, closing high if we close here in the S&P. Take a look real quick at the Dow Jones Industrial Average. Take a look at the Dow. It's trading at its best level right now since mid-August. I mean, boy, oh boy, you're seeing the Dow really snap back. I mean, we were just down below 29,000 a month ago. Now we're pushing 33,291. So a big rally from there. And then let's take a look at the NASDAQ 100, the QQQs. See, they have not been doing as well because the tech stocks have been underperforming. And remember that the QQQ is heavily weighted to the big FANG stocks, the big stocks, the Apples, the Amazons of the world, Meta, Microsoft. A lot of those have gotten beaten up, and that's why it's been lagging. So you're now up against this red line that's a 50-day moving average. We break above that, that's good. But really, there's this area right here around 284, 285. You got to break above that. That's a double top, triple top. Then we probably run to 310. So keep an eye on the cues for really the next big direction in the market. But the way it's looking here with the S&P about to break out, the Dow Jones breaking out, I think we're setting up for a nice rally. Here's the Russell 2000 index, symbol IWM. This is the small mid-cap index. So you can see here it's up against resistance right at 185. You break above that, folks. You're looking at something where this is a downtrend line here. You break above that, you're already above the 50-day moving average. You'd be above the 200-day moving average for the first time really since going all the way back 1 year ago. That would be a major breakout for the small mid-cap stocks. So we're seeing not all charts are the same. We're seeing kind of the Dow lead, then the S&P is right there. The small mid-caps are on the verge of a major breakout. And the NASDAQ is kind of lagging behind a bit with some of the big tech stocks still getting beat up. But I do think that there is a situation here where once things start rolling, you're really going to see some of these tech stocks take off. So that's where we stand. Again, we had a lot to talk about. We crammed it all in just over 20 minutes. But again, CPI coming in lower than expected, which is leading to the Fed likely only raising by 50 basis points in December, which then leads to the markets rallying today. The S&P up over 4%. And we have the Russell 2000 index, the small mid cap, up over 5.5% today, folks. Enormous move on the upside. I think overall we're going to see a kind of a government that is just stagnant, which is okay. Less government's good for me. Then of course we had the Bitcoin issue with FTX and Binance. We jumped into that for you, and then we showed you the charts of what's going on in the market and where I think we're going from here. So thank you so much. It's so nice to be back live in the studio down here in Florida. I will be coming from an even sunnier place, hopefully next week, heading back down to Nicaragua, and we'll be doing a show live from down there. So I hope everybody has a wonderful week. Hope everybody, again, stayed safe through Hurricane Nicole, but have a wonderful weekend. And, when the market's up like this, enjoy it. There's no reason not to. So thank you so much for watching. Once again, this is Making Money, and I'm Matt McCall.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.